Let's drill down on one of the more rate-sensitive sectors. That would be technology. Still outperforming the broader market, and within tech, it is still all about the Magnificent Seven. CNBC's index up another 16% this year as AI continues to fuel gains. Nvidia, well, we cannot go. The over-under on mentioning Nvidia is within, we've gone 13 minutes. I think that's a record for CNBC. Up 78%. Some firms believe that the run may not be over. Wedbush raising its price target for Nvidia to $1,000 ahead of its AI conference next week. Meanwhile, Barclays writing in a note that big tech valuations reflect high-quality earnings growth, plus the scarcity of that growth elsewhere in the equity market. So multiples are extended, it says, relative to other U.S. equities, but they are nowhere near post-COVID highs, let alone the extremes of the dot-com bubble. That's a lot, Jake, to digest. Why don't you jump in here and speak to me specifically about technology, its priciness, and the Mag 7?
Yeah, I mean, let's begin with Nvidia. Clearly, 2023 is a story about incredibly strong fundamentals, upwards revisions to earnings, and that is really a remarkable trend. This is a giant company who now consensus expects for them to double revenues from $50 billion to nearly $100 billion. And that's an incredibly high bar. And if they meet that, I think that's perfectly reflected in the price here. But the risk is really, that's a monstrous leap for a very large company. And they're swallowing up almost all of kind of the economic gains from the semiconductor sector and the kind of the AI boom. And so at some point, we think those gains are going to be more dispersed. So you're starting to see AMD get more chatter. They're coming to the market with a GPU. You're seeing kind of a broadening out, whether it's Intel, Dell, other beneficiaries. And so how much will an Nvidia capture of that market share in the AI space going forward? And so those are just remarkably high standards to beat. And we think that's in the price. And if they do it, well, that's good on them, but, it's a difficult thing to do.
Speak to the question of this market resembling, to the extent it does or to the extent it doesn't, the market of 1999-2000. That was a period where technology and growth stocks were zooming ahead. The market was concentrated in a few stocks there. Dell comes to mind, Cisco comes to mind, others as well. Is that a fair analogy to today's market, or is today's market sufficiently different that we needn't worry about there being a bubble and a bursting of the bubble?
I think the biggest difference today, these are much higher quality companies than what we saw in 2000. Not in terms of their future prospects. Cisco obviously turned out to be an incredibly strong company. It has, a very long track record of success. But, Nvidia is making tons of money. Microsoft's making tons of money. These are huge companies at scale that are very profitable and high quality and very long track records of execution. So that's really the biggest difference. So as a result, we don't think valuations are quite as stretched as we saw then, but they're certainly we're approaching that rather than kind of saying we're cheap here.
Where should I put my tax refund to work right now?
That's a difficult question. I think there's a lot of opportunities beyond the U.S. large cap sector. So whether that's U.S. small caps, where I think, if you really focus on profitable names, they're trading at a really large discount to large cap peers. You can see that in tech. You can see that in other industries as well. And there's also opportunities abroad. Japan's obviously had an incredibly strong year to date. And we think that's likely to continue. If you look at kind of their return on equity relative to whether it's the U.S. and Europe, there's a lot of things they can do. They have the levers to pull in order to increase returns for shareholders. And we think they're taking those measures. We need to see them actually realize that, but they're at least talking the talk. Let's see if they can walk the walk.